Rachel Reeves's autumn budget tax strategy may have aimed to boost Treasury revenues, but instead, it risks backfiring as businesses and individuals adapt to avoid the squeeze. Rather than generating more income, these tax hikes could actually reduce government revenue, a concept explained by the Laffer curve, which shows that excessively high tax rates discourage economic activity and ultimately yield less tax revenue. Many on the left dismiss the Laffer curve, but its effects are undeniable. At an extreme, a 100% tax rate would result in zero revenue since no one would bother working. While Reeves hasn't gone that far, her policies may already be crossing the threshold where higher taxes lead to diminishing returns. The UK's tax burden is set to reach a post-war high of 37.7% by 2027/28. Yet for many Labour activists, even this isn't enough. One of their key targets is capital gains tax (CGT), which they see as an easy revenue source. Their idea? Match CGT rates to income tax bands and watch the cash roll in. But tax policy is rarely that simple. HMRC previously estimated that increasing the higher CGT rate by just 10 percentage points would actually reduce revenues by more than £2 billion, a decline of around 7.5%. Despite this, former Tory Chancellor Jeremy Hunt slashed the CGT free allowance from £12,300 to £3,000. Reeves followed suit by increasing CGT on non-property assets to 18% for basic rate taxpayers and 24% for higher earners. She also cut tax relief for small business owners and entrepreneurs. The consequences have been swift. The Office for Budget Responsibility, OBR, has now revised its CGT revenue forecast downward by a massive £23 billion by 2030. Charlene Young, a senior pensions and savings expert at AJ Bell, called it a disaster. Just 5 months after the budget, the OBR has wiped £23 billion off the projected CGT take. This year alone, CGT revenue is expected to drop by 8.5%, despite Reeves and Hunt's tax hikes. The reason? The Laffer curve in action. When tax rates exceed a certain threshold, people alter their behavior. Some delay selling assets, while others reduce their business efforts to avoid higher tax bills. The same principle applies to Reeves's other policies. The moment she hinted at tax hikes in her autumn budget, economic growth stalled and it has yet to recover. Her upcoming £25 billion national insurance raid on employers is likely to cause further damage. Taxpayers don't like being pushed too far, and instead of gaining more revenue, Reeves's approach may end up costing the economy. Will she adjust her course or continue down this path? Stay tuned for more updates. Subscribe to our channel to keep up with the latest developments in UK politics.